Good afternoon and welcome to the end of week market review for Friday, January 11th, 2013. You're going to see that we've got a few things that we're going to be covering off today. We're going to be taking a look at the market news, which will include some economic reports. We'll also be taking a look at the S&P 500 and the Toronto Stock Exchange. While we look at these two indices, we're going to be looking at the daily and the weekly charts. We'll then take a look at the volatility indicator, and then finally take a look at one of our successful watch list picks. Alright, so we can see that the markets did end up closing flat today, but with the markets closing all in all higher than last week. They're not significant gains compared to the week prior to that, but we can see that the Dow Jones is up 0.40% from last week's close, with the S&P 500 up 0.38%. If we look at oil, we can see that it is up 0.74% from last week. This is putting it to $93.71 per barrel. Silver is up 0.66% from last week, putting it now to $30.47 per ounce. Gold is also up 0.31%, putting it to $1,662.60 per ounce. And finally, the US-Canadian pair is down 0.29% from last week. It is now at 0.9840 pips. If we take a look at the economic reports, we could see that things weren't perfect across the board. We did have a slight increase in jobless reports at 371,000 reports as opposed to the 365 that they were expecting. So a little bit of a hit to the economy there, but we definitely can see that the economy is going slow right now after this fiscal cliff. Currently, we're looking at the S&P 500 on a daily chart. You're going to see that we've managed to break up above a cycle high that was put in place here in the middle of September. By looking at this chart, we can see that we are at a 6-month high. We can see that the MACD is rising bullish and with the black line over top of the blue line. Whenever we see the markets this bullish or this strong, we do need to accept the fact that the markets are getting a little bit overbought, and we could expect a pullback very shortly. If we review the weekly chart for the S&P 500, you can see that we are definitely moving up slowly. We have pretty much been moving up for the last 4 weeks now, maybe even 5 weeks here. So we've definitely had a good, strong 5 weeks, despite the concerns that we've had over that fiscal cliff. And you can see that we managed to break up beyond that cycle high that again was placed in September. Now what's interesting though is if we take a look at the S&P 500 on the weekly chart, but really zoom back to the 5 years, you can see that we've actually closed at a 5-year high. The only time that the S&P 500 has been higher than this was just beyond this 5 years and in 2007. During that time, we ended up getting ourselves a fair bit higher, and that was the only time that we've been higher in the last 8 years. So we could actually see that we've had a significant amount of growth over the last 5 years, even though the beginning of the 5 years here was definitely downward. Alright, switching gears here and taking a look at the Toronto Stock Exchange. We can see that it's following very similarly to the S&P 500 on a 6-month chart. We can see that it's up above its cycle high that was put in place in September as well. We can see that it's managed to stay up above here a few days longer than the S&P, but definitely is still slowly rising. We can see that the MACD is rising bullish and with the black line over top of the blue line. Again, the TSX is looking to be overbought because it's as high as it is. Once we move over to a yearly chart and a weekly chart for the TSX, we can see that the TSX isn't doing nearly as well in the big picture as the S&P 500 has been doing. But we can see that we are still trending upwards. with 1, 2, 3, 4, 5, 6 weeks of gains. So the TSX has definitely had a pretty good run without anything to be too concerned about with that. Now we're looking at that 5-year chart. You can see that the TSX still has plenty of room to grow before it breaks above its 5-year high. In fact, it would need to break 15,000 before we see the TSX at its 5-year high. So we've definitely got a lot of ground to cover there, with many overhead levels of resistance. Looking at the volatility indicator, we are a little bit surprised to see that it's still trading as low as it is, with it currently at 13.38. We know that the volatility indicator typically stays between 14 and 16 when the markets are at their best, with it creeping up into the 17s periodically. But right now, with it spending pretty much its entire week below 14, we do know that the volatility indicator is much lower than we would expect it to be. Because it's this low, we really can't expect it to stay down this low for much longer. We are going to expect that it will increase. This ties up very nicely with the charts that we see for the S&P 500, which are definitely getting overbought and trading too high. So as we see the markets pull back, we will see the volatility indicator increase in value, making things a little bit more volatile. Alright, and right now we're taking a look at a great pick that we had, Royal Gold, which was from our watch list. It was our advanced watch list on January 8th. We can see that we would have put in a bid at $80.12 because the hourly chart was showing unaligned EMAs, and with the stock closing up above the 50 EMA. So with that said, we ended up seeing a 2.55% increase, where it then found some overhead resistance at the 50 EMA. You can see that on the day that the stock was on the watch list, volume was higher than normal, with all of our other indicators rising nicely. So that was definitely a great opportunity to get in and make a trade off of one of the gold companies, which was looking stronger while the markets were looking rather weak. If you guys have any questions about anything that we've covered, please let us know by emailing training@idealtradinglifestyle.com. You can also call us toll-free at 1-888-942-0266. Just make sure that you're dialing extension number 5. And as always, we encourage you guys to continue to trade, but make sure that you're always using your disciplines. Anytime you deviate away from those disciplines, you are going to end up experiencing losses that you wouldn't normally experience. So make sure that you're always trading by the books. And with that said, this was the end of week market review for Friday, January 11th, 2013. Ciao for now.